Hello, everyone. Stocks basically consolidated nicely today. Volume was well below average. It was slightly higher on the NASDAQ. And with the NASDAQ being down over 0.2%, it's a technical distribution day. But as you can see, overall, it's tight price action as we continue to trade in between the 50 and 200-day moving average. Overall, though, once again, the problem of the volume and price action is still apparent. You get the heavier volume sell-off in August, lower volume rally August, September, heavier volume sell-off September to October, lower volume rally back into resistance here in October. But that being said, patterns are developing out there. There's nothing great yet, but in a lot of other kind of leading stocks, you can see DTSI kind of looks like it's rounding out. You have GoPro, kind of looks like it's rounding out off the lows. Fitbit, Apple. So you have some stocks that look like they're trying to round out, and at the same time, we got some big cap leaders. Even though they're not doing great, they're still near new highs. So it's not terrible out there, but the price action, the index is with the volume is indicative of a market that's not ready to run. There's still a lot of blow-ups out there, a lot of bad reactions following earnings, and like even CMG today, its price action. It's not good. MBLY, these aren't really patterns that you see in very, very strong markets. It would be a little bit more bullish. But, right now the patterns, the leadership, it continues to be in oil, gold, more defensive related, chemical, some real estate related stocks. And it just isn't an exciting leadership. So if anything, I could still see us backing and filling here as long as we stay in the NASDAQ below the September highs and above the August lows. We're really just range bound, and as long as the volume characteristics are what they are, I don't recommend looking much into this market. We remain under neutral condition. Now we blast off above the 200-day moving average on strong volume, and I got breakouts everywhere in leading stocks. Our models will switch to buy in this one, but still there's a lot of work to do. And in the Russell 2000, you can see it's nowhere near its 200-day moving average, so and it's quite a ways away from its September high. So normally you want to see this index leading, isn't really leading on the short term. And actually, let's go and bring up a bunch of indicators that for you it's not important. To me, it's always volume and price, but I know how to use my indicators. And if we look at our oscillators, we can see on the Russell 2000, MACD, it's getting into the overbought territory. TSV is already there. Stochastics is racing up to overbought, and RSI is trending up into overbought territory, even though it's nothing crazy yet. But once again, you see on the NASDAQ, the oscillators, stochastics get near overbought. TSV and MACD is nowhere near overbought, but we're closer to overbought than we are oversold. Now, overbought can stay and get more overbought, but normally when we see that happen, we've got some powerful moves out there on some strong volume. We don't have that, so normally lower volume rallies, when they get overbought on our oscillators, we normally see a pullback. Now, will that pullback lead us to new lows? Probably not. And if that's the case, especially if there's lower volume, get ready for a big, powerful rally, hopefully sometime November, December, January. But that's all speculating in the future. As of right now, still basically overall range bound. Don't want to look too much into it. Looking at the bigger cap indexes, you can see TSV and MACDs getting overbought. Stochastics already overbought. So that, these big caps do not have that in its favor. S&P 500, same similar situation. Pretty overbought short term. So we could start expecting a potential pullback. Doesn't mean it has to happen, but I tell you what, heavier volume sell-offs, lower volume rallies are not the kind of stuff that powerful uptrends are made of. So keep that in mind. But overall, not bad. Still range bound. Staying between those August, October, September, those August, September lows. We stay below that 200-day moving average. We're just range bound, biding our time. Consolidation patterns are forming out there, but once again, nothing amazing. Now, with today's market action, we have no new long signals. Flagged a couple of stocks. I'm in no way interested in going long these stocks, but there is some good strength. You got Sirius XM Holdings breaking out to a new high. That was a nice pattern. And then TTS, Tile Shop Holdings, goes along with our past long TILE, which is continuing to make a solid pattern. Real estate appears to be one of the only hot areas, in this market, even though there are a lot of other good stocks. But I guess the other sector that's really standing out to me are banks like SBNY, FDEF, OZRK, you can see all these stocks are breaking out to new highs. SFBS, you can see this one bouncing off 50-day moving average to the pocket pivot point signal. Once again, ignore all those lines. They're beneficial to me, and ignore the bottom part here, but once again, it's just something I personally use. So, we got some signs that things aren't that bad. He's got some big caps, even though it's defensive related, trying to looking like they're bottoming. You have bottoming formation patterns forming. Doesn't mean that they definitely are, but I tell you what, there's a lot of better looking patterns out there. Once again, nothing great, but they're out there. They're beginning. It might take some time to fill, but it's always good to see Apple's reaction today. It's good to see the rounding out in those other stocks that I posted earlier. And if we continue to see this in stocks, ORBK is another one. You see that rounding out action. We continue to see more of that. The right side adventure of these consolidation patterns might be fun and might give us a nice little rally. Now, even though we don't have any new long positions, we do have one full sell position, and sadly, it's in our biggest leader, and I kind of want to explain this one. So ANAC, if you want to, you don't have to sell it all. If we were still under a buy signal, we still have gains from the original long signal of 168%. Now, under a neutral and sell signal, this heavy volume breakdown below these important support levels, that's it. That's multiple days of selling off on above average volume below the 50-day moving average. But the reason why it's only now full signal is because back here, even when we were down on this day, our percent return from our long signal to this day here was still 232%. We still have a 200% gain. I don't get rid of winners that easily. I get to hold them. So all the above average volume selling off, not a big deal. But now these lows are important, 107.12. So if we start to break those 107.12s on heavier volume, I have problems. Now, we don't do that. As you see here, when we fall here on the 13th, volume's below average, and we've been holding above support the whole time. So all the above average volume red bars is kind of insignificant to me. Now, following this move on the 13th, we had the price action on the 14th. Still looks like it's holding in there. 15th definitely looks like it's holding in there. 16th still holding major support. 19th the same thing. Today finally breaking it on heavier volume. But it's above the 200-day moving average, which remember is always our final sell stop level on anything that's still up 100% plus. But whenever we're up 100% plus under a neutral and sell signal, the selling off below the 50, above the 200 has to be on below average volume. When it's on above average volume and it's breaking support after trending below the 50-day moving average for a significant period of time, which I consider a week to 2 weeks, and as you can see it's been way longer than 2 weeks, then it becomes a full sell. So ANAC, final sell signal, I'm all out of it already. With my final sell stop was right here below this low day, and when it traded below it here the past few sessions, I was knocked out of all of ANAC. But ANAC is now fully a full sell signal, and that leaves you with 168% gain on the final position. But besides a full sell in ANAC, there is nothing else happening tonight. I do have one speculative long position in a building material stock, but the stock is so thin that even if I just use 0.5% of my account capital in this new long position, it has a chance to move the stock. So I got to set buy limits and buy stop limits. So I just make sure that I refuse to pay for more than where I want it to go. But I don't even want to list the stock. It's so thin, and it's just not worth it. It's not a higher quality stock. And once again, day trading continues to be where it's at. Intraday in the chat room for the close. Brought up ERII right around 688 as it's breaking out, and after hours it's up to 750. And as you know, Weight Watchers has been in play the past 2 sessions as it's a billionaire play. Billionaire plays are the hottest plays in 2015. As you can see with today's gains in Weight Watchers, that is the case. There is no way in hell I would still be long Weight Watchers if you were long off the billionaire news yesterday anywhere around the 12s and 13s. I would be looking anything for Weight Watchers to be topping out sooner than later. Doesn't necessarily mean it's a short, but definitely wouldn't consider wanting to go long WTW anymore. And then once again, reviewing one of our recent short signals, EROS. EROS, perfect short signal back here on the 13th. Shares available at Interactive Brokers. And as you can see, in a very short amount of time, 1, 2, 3, 4, 5 days, 34% gain. Long signals aren't giving us this kind of gains, yet short signals are. Kind of still tells me that the easier money is kind of probably to be made on the downside, but we have a better looking market. We'll see how it goes. We're still range bound, everybody. I'm still neutral. Let's go Mets.